Welcome to Resilience and Resolve with Lance Drury.
Today on Resilience and Resolve, we're decoding those dreaded IRS letters. I'm Evan Mack with Lance Drury, and we'll cover how to interpret common IRS notices and what your next step should be when they show up. This is IRS Notices Explain what to do and not to do when the mail arrives. Lance Drury, sir, we got to let people know about these notices, sir. This is a hot button issue.
You're entirely correct, Evan. People need to know about this subject, and we're going to explain it all to them.
Yes, indeed. What's the difference? We're going to get bogged down in a couple, letters and numbers, y'all. Stick with us on this. What's the difference between a CP14 and an LT11, and kind of tell people why they matter?
Okay, well, a CP14 is the first assessment of the tax. Once the tax is filed and processed, then invariably they're going to send out a CP14 notice, which basically tells the taxpayer, this is what you owe, please take care of it. Now, there's no hard deadline associated with that, but that's the first letter in a sequence of letters that the IRS sends out before they're in a position to levy you. Now, the LT11 letter is the final notice of intent to levy. There's going to be prior notices to that, namely a CP503 and a CP504, and the CP504 will say that they're going to levy you, but they can't because it doesn't have your appeal rights. And the reason these letters are sent out is that in 1998, Bill Clinton got with the Republican Congress and they created all these safeguards for the taxpayer, created due process rights before the IRS can attach your property. Prior to that time, they could just go out and seize property. So the LT11, the significance is if you do not try to stop that levy prior to the end of the 30 days from the date of the letter, the IRS can wipe out your bank account, take 90% of your take-home pay. Now, if you have a revenue officer, you got to file it within that time or they're going to levy. But if your case is in the automated collection system, I just did this week.
Yeah.
I filed an equivalency hearing, not a CDP hearing. The CDP is filed prior to the end of the 30 days, but it stops the clock on collections. So if you have a client who's close, I got a guy, $90,000 runs out in September. So we filed an equivalency hearing. By the time she issues a determination letter, gets back to collections, they're basically going to have a month to collect. And there's no way they can collect in that time. Because if you file the equivalency hearing request after the initial 30 days, it does not stop the running of the clock on collections. So which one of those avenues you take depends upon how much longer the IRS has to collect the tax against you.
So nothing like freaks people out more, especially me. It's like when those notices you get in the mail from the IRS, when you see that logo at the top of that envelope, like, are they always accurate though? Can they be wrong? Like, when are we supposed to, get nervous?
Oh yeah, the IRS can make mistakes from time to time. They do it all the time. In fact, they're making more mistakes now than they ever have, which is why it's taken us longer to get cases resolved, because we're basically correcting their mistakes a lot of the time. And so, but when you get that letter, you've got to file the proper legal paperwork or you're going to get wiped out. And you know what? People get freaked out, and that's when they call me. So just as an aside, normally my busiest months are January through May. It's all psychological, but people think the IRS is going to come after them more during tax season. That's not true. Then things slow down in the summer. People want to go out on vacation. They want to have fun in the sun. So they say, okay, I'm not going to deal with my tax problem until the fall. Okay. Last July, when it's normally slow, I had a record revenue and profit month because they were either wiping out people's bank accounts or taking their wages, or they were threatening to do so. And that's when people call me. Now, sometimes people wait too long and then they're already levied. And some of that time now, there's not enough money there to hire me. I got to tell you this horror story. It happened out of Tennessee a couple months ago.
Yeah.
This guy owed $1.2 million to the IRS. He'd been fighting them on his own for 10 years.
Wow.
He said they all lied to him. He didn't do this. He got this new guy. And I'm sure he didn't send in what the revenue officer requested. And if you don't do that by a specific date, they're free to levy. So he comes to us before these levies had hit, and he didn't hire us.
Wow.
And the next week or so, 300,000 in his retirement account had been wiped out, and all of his other assets had been levied. And at that point, the odds of us trying to convince the revenue officer to go back to square one were not very good. And so this is the problem. We see it all the time. People think they can do this on their own, and they can't. I'm just going to tell you this. Evan, when I was just a young lawyer, which was several moons ago.
Yesterday? Last week?
Something like that, Evan. I only did 15 hours of continuing legal education a year.
Wow.
Now, me and all my other 8 attorneys, we spend a minimum of 50 to 100 hours or more every year just keeping up on this stuff because things are constantly changing. They're a bureaucracy. Their funding changes from year to year. So then they make other adjustments. So it's constantly a learning game. And so, accountants are great with the numbers, but I tell everybody, if you don't hire me, there's 3 rules. You hire an attorney that does this every single day. I've seen accountants put tens of thousands of liabilities on the books for their clients because they have them file all the returns, and the IRS only requires the last 6. So if the IRS didn't file, you don't file, the liability 0. But you're self-employed. Wow. You don't make estimated tax payments. You file your return, you're going to owe $10,000, $20,000. Second rule, go local. And number 3, don't hire one of the big boys. They just take your money. There's a lot of scam artists out there. So you got to watch who you deal with.
So you talked about the time, though, a little bit, but how much time do taxpayers typically have when it comes to response before this enforcement begins?
Well, that varies. I mean, they're a bureaucracy. Okay. Somebody can go for years and never get a notice.
Wow.
Somebody can go 20 years without filing the return and the IRS doesn't get a hold of them. Then other people, as soon as they file their return, and its process, they get the CP14 notice. So again, there's no rhyme nor reason always to how the IRS operates. But once you start giving those levy notices, you better take some action because it's not going to be pretty.
What kind of action can they take if they get that? You know what I mean? Is it to call you? Is it to call your firm?
It's to call us, and we'll look into it, and we'll see whether we should file a collection due process hearing or wait beyond the 30 days and file an equivalency hearing. But in any event, that will stop the levy and buy at least 6 months for us to get our ducks in a row, which basically means going through financials, getting documentation to support the financials, and then calling the IRS to set up an agreement. Because once an agreement's set up and you pay on that agreement and you're 100% compliant moving forward, which means you file your returns on time and you pay your taxes on time, the IRS is not going to levy you.
So for the people at home, if they call you, you can kind of stop that process in its tracks even before things get out of hand.
Yes, absolutely. Absolutely.
Awesome. So can calling the IRS ever resolve an issue notice? Like if I called myself, could that fix it? Or could I make things worse? If I literally voluntarily call you, call the IRS, you know what I mean? Just try to get in front of things. Is that a good thing?
No, it doesn't. We never call the IRS unless the client has called them before we got involved because they're going to give them a deadline. All you do is put yourself on that radar when you call them up. So we don't call them unless we have to until we're ready to get a deal done with the IRS. And so I hear this from people that come see me, and they'll go to another practitioner, and the practitioner calls them with the client during the initial consult, and then they got 20 days to get financial statements. I had a guy owed about $40,000, and he called him up himself. I said, that was a big mistake. You only had probably a year to go on the collection statute. Now they want your financials in 20 days. I said, so he didn't hire me. He should have, because he probably just made it worse. he might have had to pay it all back. Yeah, I got a guy once, Evan, into currently non-collectible, and then my services are concluded. We revoked the POA, and so he wasn't going to pay a dime. Well, it gets a reminder notice, and we put this in our closing letter. You're going to get a yearly annual reminder that you owe the tax, but they're not coming after you. So he gets one of these annual yearly reminders, and guess what? Calls up the IRS and agrees to pay the whole sum back.
Are they counting on that? So is the IRS kind of counting on you to do that based on those notices? Are they counting on you to call
and some of those notices are misleading, and they're misleading for a reason. They're trying to get people to panic and to call them up and to pay off the debt.
So what about a past tax notice? You know what I mean? That you feel is resolved, that you feel that was been put to bed, but then you receive a notice for a tax year that you thought was already resolved. You know, what could he do?
Well, they have to hire us again. Here's what's going on right now, and we still haven't figured out why they're doing this, but we have people that we get placed into currently non-collectible status. They're older. They're on a fixed income. They don't get a big settlement of any type. They don't make any more money than they did before. And the IRS is arbitrarily taking them out of currently non-collectible status. And then they have to hire us again because we're back to square one. We got to go through the financials, and we have to prove all over again that they don't have the ability to pay any of this back. So that's just one of the things that they're doing and have started to do the last couple of years that they never did before. And it's just causing problems for a lot of taxpayers, and it's costing them more money then to hire us to get them back into currently non-collectible. But if they don't hire us, then they're going to end up paying the whole thing back if they try to do it on their own.
So when is the right time to call up like a Lance Drury to after receiving a notice? Is it right when you receive the notice, or should you chill a little bit?
Yeah, no. As soon as you get any notice from the IRS, you should be picking up that phone and calling us and arranging for a free half-hour consultation. And then at the end of that, we'll assess what it is that you need to hire us for, and we'll go from there and get your problem resolved for you.
All right. Lance Drury, thank you so much for the information, sir.
Thank you, Evan. You have a great day.
You too. And everybody at home, if you received an IRS notice and you don't know what it means, do not wait. Visit lancedrurylaw.com for help interpreting your next steps. You get that free 30-minute consultation. So, what do you got to lose? Lance, appreciate you.
That's right. Appreciate you, Evan. Take care.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.